Hello, hello, good morning. Welcome to another ES Futures. Today is Friday, October 18th. It is 9:11 a.m. This is the end of the week. Just give me. Just allow me a second, please. I need to connect something here. Okay. All right. The market potentially is opening right at the center of yesterday's profile, which increases the odds that we may have a rotational day today. Also, the closer to the center, the higher the odds of chop. We have a long liquidation day yesterday, which in fact is a sign that there is some. It is something that can actually strain the market, right? It can strain the market. Very counterintuitive, right? Because what we have here, what we have here with this action, you know, we got a bunch of traders or people trying to take the market lower and failing, right? Here. All this comes from here. All the trend. And there's a gigantic short squeeze that's happened here. Now all of these shorts are forced to cover. And this is the counterintuitive part here. When shorts get out of the market, as the prices go higher and higher, there's actually people jumping out of the market. Left and right. Get me out. I want to go out of this because I am getting crushed here, right? But can you see what's happening? Right? It is people, it is traders getting squeezed, right? Just getting out of the market. And this action, this behavior, this dynamic is what pushes the market higher. And what happens, right, with that? What happens with inventory? That creates a vacuum here, right? And the first thing we know at the opening, the market fails to take this high, and boom, the opposite thing happens here. The opposite thing to this, what happened here, right? Now we have a bunch of longs here, right? Jumping out of ship here. Get me out, get me out. I want to get out of here, right? Notice how we have settled here in this area, in this level here. This is seller. Where is seller before yesterday? Right there. Market hasn't changed at all. Right? Remember, one of the last things we were checking is the ability of the market of closing this distribution here. It didn't. It rather closed this one and this one, right? The ones that were going to the downside. This one has been closed, right? Not this one, not this day. So we have a market actually to the upside here. Nothing has changed. Now there is another things, right? Nothing has changed relative to the risk of the market, right? To the risk that this market has. Check your bonds. Check the bond market. Check gold. Gold is making new all-time highs today. Gold is making new all-time highs. Crude is breaking. Oof. Bonds are back at the lower portion of the range, being bought from the lower portion of the range, which actually weakens that low. Right? And yesterday we have a long liquidation day yesterday. What happened when the market has long liquidation? Right? Now you know the phenomenon, right? We got this clearly. Maybe some rebalancing could happen today. Look what's happening with crude oil. The opposite to what we have in bonds, it was we had yesterday in dollar, right? We have a short covering here. And so we notice that because the market just opens and shoots its way up, and then you have sideways trading. There's no elongation on this range. Same thing happens here. There's no elongation here. Notice how many lows this market. This is the risk here, right? We got 1, 2, 3, 4, 5, 6 lows. Market open below with a gap to the downside. Gets back inside the range. Potential destination can be this. I'm not saying that's going to happen, but we may have some sideways trading here. What is the trend in that market, in those markets? No? Bigger one, right? But now we have a range here. Now we have a range here. Look at the highs of this range and look at the low of this range. Both of them. Buy exactly from the same level, buying from the same level. Gold making new all-time highs. The rally continues in dollar, and this is this little range here. Big gap, significant gap up here. Very volatile market. Very volatile market. There is a contract is expiring also in the crude oil here. Another things, what happened? Yesterday we have Netflix took this lows here really low, and then we have a gigantic, 733. We will come back to this. No other ones are trading in sympathy here. No this one, no the Tesla, no this, no this. This is inside day, probably inside day here as well, inside day here as well. Apple. Now we have something in Apple here. Apple is 233, 733, 237. Okay. We have checked these charts, the daily time frame yesterday as earnings were 737. Where is 737? Where is 737 in Netflix? making all-time highs. Right? It was bought from the 100. It came down to the 100, and now it's going to open up here. Unbelievable. 737. Am I right? Let me check. Yeah, 737. My God, it's new highs. Netflix is making new highs. 237 in Apple, right back to the all-time highs. No, my bad. Let me check again. What's the all-time highs? 736. 237 is the all-time high. Where we are at, 236, right? Kind of like around, pretty much at this high. The same behavior, 1, 2, 3, when we have 1, 2, 3 again, all right? Buying from the 100 here, buying from the 100 here. Who's next? I guess it's Meta next. We will have a break here. Who knows? What I have noticed though is the reaction yesterday in Nasdaq wasn't that much. It wasn't that virulent. So it was kind of like quiet after the close, but now we are back to the rally high, well, the intraday high in Nasdaq. What is that? Okay, and this is the danger that these markets have here. I'm going to put these two here side by side, because this is, for me, is very important here right now. Well, look at how many lows Nasdaq has. 1, 2, 3, 4, 5. This one, M, takes all these ones out, right? But this is Nasdaq, right? It is bought right from center, and it's not that much. For Nasdaq, this is nothing. This is no excess here, basically, for Nasdaq. This is a non-excess low for Nasdaq. These markets, this is excess. I would consider this a kind of better excess than this one. This tiny excess here is nothing. Okay, so these lows are for me, very unsecure, and the risk here is very low. I mean, very high. Okay, the risk of the longs, the risk for me is very high for the long side. Now, the short side, same thing on the short side. And why same thing? Because the momentum right now, the momentum is to the upside. Right now, as today, relative to the past couple days, this is to the upside. This is a market to the upside. Well, it's opening right at the center as well, kind of like close to the center, right? Now, check the ES. We have one here that was bought from this distribution here. Market to the upside. There was no reason to short this market yesterday. After this movement, there was nothing. Okay, there was nothing in this market. Nothing. There was nothing. CEDO remains the same, remains unchanged. Right? Okay, and this low, along with this little gap, little distribution here, is what I am watching today in the lower side. The upper side has these three highs altogether, very questionable highs, right? Do you remember Nasdaq yesterday, before yesterday? What we have up here in this day? And how this market reacts the following day. After this day just stops right there, you have a huge rally, right? Now we have this one here. This one buying from this low. How many lows do we have here? Remember Nasdaq. Where I am going to check the ES now. I'm going to open this profile. Look at this. 1, 2, 3, 4, 5, 6 lows right there. And now, as important as it is what the market does, it is also really important what the market could have done but didn't. Okay, remember that. That is also a nuance. I don't have high expectations for today. And remember, the key word here is expectations. Once you start to expect something, that's I don't like that. Now, remember yesterday. What happened yesterday at the opening? Why at the opening? What is happening now? Market reached this high. Pretty much POC over yesterday's POC, held are the same. POC could have been up here as well. What is doing? They're trying. Traders are sometimes, but traders are just. You can see them, right? What they are doing now. Okay, yesterday the market has a gigantic break at the opening. Of course, today the market is going to do the same thing. So why wait until the opening? Let's do it now, right? Just before the opening. So I am going to be short now, right? I am going to be short now. Now, yesterday I missed this break at the opening. Now, I'm not going to miss it, of course. Okay, I'm going to be short here. When the market open, I am going to ride the short, right? Of course, that's going to happen. Be careful with that kind of thinking. Just that would be trading, thinking, what the market will do, right? In certain terms, right? Remember, everything is both based here, and we got to go, wait and see what the market actually does. Now, new highs, trending higher. This one is also trending higher, but we have a potential here, and this is the daily time frame. We have potential here, right? Is this trade, is this movement going to reach the opposite side of this 1, 2, 3 day range? It has looked above the range, it's come back inside. The ultimate potential destination of this movement is the opposite side of this range. What do we have around here? That's the 58.50. Okay, 58.50. We have this low. That's very questionable low here. Now we have gigantic amount of blocks here, kind of like holding this market, right? This market is just being held here. Somebody is buying huge amounts here at these levels here. It happened yesterday. It happened before yesterday, and it happened the day previous and the day previous to that. So kind of like 3-4 days in a row that's happening now. $5,900. Oh, surprise. Who would think, right? We have higher volume actually. You have huge volume here coming in right now. This is the highest volume in this, not the highest, one of the highest volume. The second high in the last in the past 10 days. So this is a promissory opening here. Now it has opened at the center of the range, right at the center. Opening at the center, the also rotation at high, chop at high as well. I'm not short in this market. First, I want to understand what the market is doing. Now, saddle is down here, so we have good amount of longs. It's balanced. The inventory is balanced too long here. Having a high volume could be an indication that short-term traders may not be in control today. That's just odd based, right? Let's check this one. This is the first thing. Value area low here, this day high. Usually when short-term traders are in control or are dominating, or their presence is heavy, or more than that, the lack of bigger time frame traders is shown here. Look at this. Where did this stop, for example? Right here. I wouldn't be surprised if the market comes back up to here right now. Once see. 59.10. What do we have at 59.10? I guess I will go 59.10. It's a little bit higher than this big block from yesterday. There was tremendous pressure to the downside at the close yesterday, but huge blocks there, huge, 6,000 contracts bought at once there. Okay. Next, we have our IPO's hallback. Next, we have yesterday's low and also overnight POC right there. Now, let's see, I want to see now, if yesterday the market couldn't close the gap in the first period. Now, I want to see if this market can get out of yesterday's range in the first period. This level where the market has stopped right now is where the market was bought here. This is the second time. Oh, wanna be if I can get along here, for example. Let's see if this happens. It is that level. It's very mechanical trade. My stop is 58.89 right there, for example. Not that I am long here. Came back to that, out, right? Just out. Don't stick. And this is so early in the session, man. So early in the session here to do anything here. I'm thinking this can be maybe a counteraction to overnight inventory here. Seller has been taken just like that. How many lows do we have here now? This low here is extremely weak. Do you remember we count like 5, 6 lows here, right? Now we have another one being added to that. One, 2, 3, 4, 5, 6, 7 lows. Around this 50, how do we call this? 85. 85 could be, right? 85, 87, something like that. Yeah, 85. Yeah, 1, 2, 3. Let's call it 85. Extremely weak. Extremely weak low. Value is developing lower. The long is even riskier now. If volume adds to this area here, it is actually this is actually a weird thing, right? Now it is end of the week. It is end of the week. End of the week as well. The market is very close to the center of the 4-day range. We have a 4-day range now. Right at the center of that range. As the market develops today at the session start, this level here is gaining relevance now. As a very important level right there. Feels closing that distribution after the lows are taken, after those 4, 5, 6 lows are repaired. The next thing is closing. The next thing I have to monitor is for continuation, right? So the next thing the market has to do is close the distribution, get back inside what's that, 1017 or 1016 value area, and trading towards the opposite side of that range, which also is, in the center, my bad, is the low of the 2-day range, from which we had a breakout yesterday, and also the low of the 4-day range. This can be counterreaction to overnight inventory, my friends. That low is very questionable, very, very questionable low. Look at the volume we have here. So this one has to be here. How much time? Oh boy. It had a promissory opening, right? But it looks like we are going to have lower than yesterday. As you know, as we get closer to the 15-minute mark here. This low here. This low, brother. Questionable. Okay. Questionable. What is this? 1018. 1018. Low. Look at this. We have 1, 2, 3, 4. 1, 2, 3, 4, 5. 5 super questionable lows. Oh. Right. Now, you got to be when markets have this kind of behavior. This can go long distances, man. This can go long distances. Remember, we have seen this. Markets have seen, traders have seen the 6,000 here. What is the next thing today? Right? Remember the trend line. So kind of like about this one here, right? 50, the 50, all right? The 59.50 around this area here. That would be the high. Now, if you have something here, you know, I got, if you got a loan, for example, you know, you got to be quick to adjust. Quick to adjust the stop. As soon as it start to get profits, just move the stop to break even, or maybe a little bit from break even, if you want to lock some gains, but don't expect much. This can turn the other side really quick. These options, the 59.10, there were, how much there were? 385. Now at 550, something like that. And this one's here, 59, what is the 59.10 here? 59.10, 59.10, 59.10, here, this one here. And why that? Because this mark here. Because this mark, I can use the 55 or the 50.10, and this is today. I'm not touching next week. You know, maybe around noon I may start watching next week, because this is the end of the week. A lot of things can happen at the end of the week as well. Guess what kind of inventory do we have from yesterday? A lot of shorts, right? Oh, these trades are trying to take the market lower. There's a lot of pressure to the downside. You know, after the break we have at the opening, and now look at this. Look at what is happening here now, right? Look at this. Now they try to replicate. This can easily come all the this is why I got the 50.10, 59.10, because of this mark, right? This is, you know, market might come back to this high again, which happens to be valued high as well. Maybe a little spike and then come back inside. And did you notice how I approach the market, right? Not just price based. My risk is not For example, my risk is I'm going to risk 50 points, $50. I want to risk 1 point, 50 dollars. I'm going to go long right now. But why? Why is also what is my risk is not it's not a number. You understand? My risk is not a number. Imagine. Let me call something here. Images side by side. Okay. Let me put it this out. So you may be thinking, what the heck? I'm doing this side by side, side by side. Okay, I got a picture here. Can I? I cannot make this bigger. How can I make this bigger? Okay. Is this the same road? It's not the same road, right? But you got one condition here, another condition here, one condition here, one condition. Snow, there's rain, shiny, shiny, shiny. Now, which ones do you think have, the inherent risk here, are riskier here to drive? If you're driving, which one do you think has more risk? This one or this one? By how much? I don't know how much, but I just know, right? Because I drive before, that these conditions here are more riskier than this one. I can see that clear here. I can see better here because this can be slippery. Some snow can fall in front of me, on top of my car or whatever. Right? These conditions are riskier than this. That's why that's why I say when they are long here, it's risky. Carries risk. So if I am going to be long, I know the risk I am taking. I am not risking $50. I can be risking $500, but I know under what conditions. Right? I am incorporating not just price, but time and volume, and the broader picture of the market. Okay, what the broader picture is, you may ask. All the things that we talk here, that we were talking here since before the opening, right? What's happening here? What's happening in the bond market? What's happening in the other markets? What's happening in the other indices? What's happening in stocks? What do we have in the schedule? Do we have earnings? How is there's a lot of things to consider here. This trade, for example, in Nasdaq, this movement, this can be pretty well done now. It is done for me, right? Because this movement, we have a range here, right? We have a range here with a lot of stops here above the high. That has been taken. That has been corrected, right? This has been corrected. We have a new highs, and now the range remains as reference here. This is Nasdaq. This is the Dow. Nasdaq, same thing as the years. We have a range. Right? Highs. Right there, traders can almost touch these highs here, right? I can almost touch it. Look what happened with these options here. It was bought from seller, very questionable. We have a rotational, probably a rotational. They also having a rotational market, a high, because the market is opening right at open, kind of very close to the center. Chop and rotation are high. Look at the 5 minutes, right? Double high here, double low here. What do you do here? This can be a name for technicians, right? Double top, double low, triple top, triple O, whatever. There's a lot of chops here. Just let the market, and sometimes, as it happened yesterday, we have a strong reaction really after the market opening with a huge gap here, really huge significant gap we have. Most of the times we have some back and forth, but some rebalancing, a lot of things happening here. What we witnessed yesterday is I wouldn't call it a singularity, but it's something that happens that happens less frequently. But when it happens, it's really, really strong. Right? It develops fast. And this is what we traders need to do. We have to adapt to any conditions the market have. I'm going to wait only one I'm going to trade only one environment. I can do that, but I am going to do what I'm doing. That is, I am just limiting and closing myself, right? Closing my windows of opportunities. Okay, what else? Any questions? Dum, 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 dum. It is hard for traders, right? It's hard for traders to sit on their hands. Really, it really is hard. I have to understand what the market is doing. I have an idea, and the trade usually with just appear. There's some yesterday, and with time you will have start to hone your intuition. At that one moment, time you would think, okay, come on, man. Wait a minute. The market has come back. Didn't close this distribution, so it's not as weak as it looks. But later on, it's not. The break is. The break is not. The market is not as weak as this break make us believe, right? But later, the market has some penetration of this range. It comes back once, twice, 3 times here, back inside previous range, but it doesn't take more of this. Alright? So maybe also it's not that strong. This is a rotational market. This could be, if this is a rotational market, what are the odds here, right? In this area, coming back to take this high or take this low. What do we have after the close? That was for us yesterday, just for yesterday. And then we start to think, wait a minute, this market can come to the center, closer to the center, right? Rather, I said the odds are coming lower, well, higher than the odds going higher. What's for today? Today is the end of the week. Yeah, there is no trading tomorrow. There's no overnight trade today. Netflix is out. We don't have any releases left for today. I don't know what's for the next week. I guess we have Meta. We might have Meta. I don't know. Not sure. But the inventory here is short. All this trade is shorting the market. Question of the high. This has been repaired. The market open up here. This one is history. We have this area here. You got 1, 2, 3 highs here. There's extremely weak low here. Right? Who would like to go long over the weekend? Who would like to be short over the weekend? What are the odds of somebody keeping a position over the weekend in this kind of environment? Anything can happen. Remember, we have last week we have people was sure that Benjamin Netanyahu was going to bombard Iran. I think that happens Thursday or Wednesday, right? It just didn't happen. Now, what are the odds that somebody is going to do that? Is going to let everybody know that's going to do that. What kind of strategy is that? That's one type of strategy also. Or maybe to reassure targets, I might think. Because if somebody goes into hiding when those kind of news are released, then you know who is lying, right? Then you know who you want to, lock in. Who knows? I'm just speculating here, just as everybody else. And I do have information, I guess let me put it this way. I have less information. I am the guy who has the less information here. Other people, other traders, more connected traders, more funded traders, bigger, have way more information, right? I don't have anything. I don't have that. I have zero. Okay, I have zero compared to what others. I don't have anything, and I have to also base my trade using acknowledging. I have to acknowledge that too, and that's part of the bigger picture. Okay, I am not an investor, so that's not going to be something that I will be doing. I'm not going to hedge. I'm not going to do anything like that. I don't have a portfolio to hedge. But there is going to be bigger money that will have to hedge, right? I believe they are pretty well hedged now. There is also money out there. There's companies that can be underinvested, and they've been missing out. And that can be the reason of these kind of movements as well. My perception of this market is that the selling is coming from more serious, a little bit more serious selling than buying. Kind of the buying is forced and the selling is the trade. But it happens, you cannot see it right away. You need to be in the market and perceive that. I have perceived that here, for example, in this day, but just until just here and until this area, right? I guess until here or here. After this, it just becomes out of control, right? Remember, when you sell or when you buy big time, you want a position to be, you want to enter to be as close as possible to your initial entry price, to be as close as possible to the final entry price. You don't want to have a big spread there. Look at that B low where it is. This just remains here. I want to close this. I don't need that anymore. Look at the B low is. Look at where B high is. There's a lot of fight around the 5900. See? Traders love these round numbers. Okay, I'm going to stop ranting and go silent for a little bit. And let's going to leave this here. And you don't want to hear this. Ooh, okay, yields are going lower, so bonds are going higher. Look about Dow, Nasdaq, and S&P. There's a divergence here. When that happened, they also rotational high. Oh, no. I'm going to take that back. That's not a rotational high. Not the other rotation increases. This software is Windows Trader. It's not cheap, but I think it's really good. You can have also, there's a lot of webinars here that you can watch. These are free. You can learn about market profiles. That's one thing. You have also Jim Dalton. There's a lot of information he has. You can get here. There's like 200 webinars here. Really nice one to learn about market profiles. And also he has his YouTube. He has YouTube. He has 2 channels actually. Yeah, this one too. There's a old intensives here. It's a really nice one if you can watch them. Doesn't use X that much. This is the wife of Depp. She's famous because of the documentary Flores. I want to watch this. Not I want to think. I want to learn what other traders are thinking. Not that I'm going to follow what she does, but I was saying she's her husband is Dave Paplatos, which is one of the creators of or the owners of Photon Trader. And I use Photon Trader because it has a plugin that let me use Window Trader here. Otherwise, I would have to buy data just for Window Trader. In this case, I have the trading platform and the plugin for charts, for these charts. I don't have nothing else. I don't have anything else. The other charts I use is for my homework, which is these ones that I showed before. What? And these ones here. I don't have anything else. Look how mechanical this trade is. Coming from zero, now it's coming from this high. What's next? What can potentially be next here? Maybe the opening, or maybe a high here. There's nothing else in between. A high is almost B or C as well. Let's see. And sometimes when we have this kind of days, let's take a look at the 5 minutes chart here. Look at this. You got a big range, big opening bar, and there's a lot of overlapping bars in here. This is what very short time frame traders. Traders that use price only mostly use only 5 minutes charts. Most of them use 5 minutes charts. Pros use 30 minutes charts. You know, you can have a better picture of the market that way. It requires time though. A lot of patience here to see, or for an opportunity to appear here. Yeah, so we have an opportunity so we can see that 5900 level is getting weaker now. Alright. Now look at this. How many times it has come back to the 5900? 1, 2, 3. And so the gold also, this is, this side is weakening. This is the shortest time frame. Shortest time frame. It's getting weaker. We have a bigger time frame here. You have 3 here, and we have 1, 2, 3, 4, 5 down here. Can you see the risk that these longs are taking? Oh, well, we are going to take this higher. Next time we come here, the market is going to shoot to the moon. I'm not saying that cannot happen. Okay, I'm just trying to be aware, right? And to understand the dynamic of today's session and figure out the risk. What amount of risk I am willing to take. What kind of risk I am willing to take. Remember, what is, do I still have it? I guess I closed it, right? Yes, I closed it. Remember the context, okay? Context. Risking $50 just because, okay, I'm going to risk 1 point, I'm going to be long here, right? That would be, for me, that would be the equivalent of, okay, I have these conditions, I have these roads, this is what I'm going to do, I'm going from point E to point B, okay, I'm going to risk 1 leg here, okay? If I break 1 leg, I stop driving. Okay, that would be for me the equivalent. If I miss a toe here, if I miss a finger, I'm out. Right? I quit driving. I will stop driving. That's, for me, I have a different way to assess a risk. Right? I know that these conditions, if I drive in these conditions, my inherent risk is higher. So I may want to use maybe winter tires. Or, I would not use an electric car, for example, maybe because, I know the batteries will not, don't last long in cold weather, for example. That's assessing my risk. I am preparing for the trip there, according to the conditions of the road. The market also have a certain kind of environment that increases the risk for one side or for the other side or for both. And if I know that I am taking high risk, maybe okay, I am going to use tight stops, or maybe I'm going to use my options cannot be that expensive. For example, right? That 50, for example, that 59.10 options there, that's 3 points. 3 points right now. They were when the market was breaking here, with one down here, they were 3 point, when it was down here, it was 3.8. Right now it's up here. I guess how much there? 3.7. Okay. And that's because 1 hour has passed and the market doesn't have the conviction to go higher. This market is going back and forth, back and forth, back and forth, back and forth. How much is the VIX? For the market, am I making all-time highs? Oh. I don't open. I don't want you to open. Okay. This is going. For the market that's going that making new highs. 19% the VIX is. Oh, man. Come on, man. Ha ha ha. 10% Netflix. Wow, man, that's huge. That's huge. Oh, who's next now? Who's next? What? November 1st, October 29, October 31, October 30. This week is packed with earnings. This week, the last week of, oh, come on, man. The last week of the month, we have Apple. Last week of the month, we have Apple. We have Google, we have Amazon, Microsoft. No fucking way. All them are the last week? God. Tesla is next week, next Tuesday. And probably in November, by the end of November. Nvidia. God, there's a lot of stuff for next week. Oh boy. That's one. The other thing is what kind of events we have next week. PPI on Monday. Weekly claims, weekly jobless, Tuesday. No, just next week is going to be packed. No, the week after next week is going to be packed, man, with earnings. God. A CPE, also CPE, CPI. CPI Wednesdays. This is PCE. 31st. This day. Fuck, my gosh. Oh boy, no non-farm payrolls feels. Wow, this week, man. The week out. I guess I can you see here all the hedging that's happening here now? all the hedging that's happening. We have a week, extremely heavily packed week at the end of the month. My God. Oh boy, that's going to be an interesting week. That's going to be an interesting week. This is going to be an interesting week. All right. Um, unless it is 10:20. Now we have the market is forming an inside bar here. We have an inside bar. The issue there. It's just taking space. I'm going to use another a small tablet to watch that and remove this thing from here. Oh, I was saying, unless there's any questions, I guess I'm going to call it the Dow is clearly very questionable low. Those is lower. These two are going lower. This is an inside bar. This is going higher. You know, every index is doing different things. So the odds of rotation are increased here. All right. No questions. I hope you have a wonderful rest of the day. Stay safe. See you next week. Oh, my next week I may not be here. No. Godos are not going to be here next week. Alright guys, see you. Have a good weekend.